Australians dump fixed-rate loans as inflation figures set to reach a 14-year high. Reports that Dexus and Mirvac are ready to carve up AMP Capital, the funds management arm of AMP, and why Ferrari has some red-hot problems. It's Tuesday, the 26th of April, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Did you enjoy your long weekend and pay your respects yesterday for the Anzacs?
Yeah, it's a pretty significant day, isn't it? And I actually went back yesterday and listened to your interview again with Dr. Brendan Nelson from the Australian War Memorial. That was a fantastic chat, that one.
It was just a perfect chat for Anzac Day because he really is such a respectful and respected person. And when it comes to Anzac Day and the War Memorial, obviously having run it for 7 years, he knows exactly what he's talking about. And he's a wonderful person, really. And it was just great to chat to him.
Yeah, it certainly was. Look, Sean, can I make a complete change of topics and a complete change of tone as well?
Sure.
Just want to tell you, I don't know whether you've seen this yet, but our weekly podcast called Safe Word by Fear and Greed, did you know that this week it is being featured by Apple Podcasts on the Apple Podcasts homepage?
I'd heard a rumour. I've got to be honest. I had heard a rumour.
It's pretty exciting. It's pretty exciting to see Safe Word by Fear and Greed up there in lights now, kind of making a go of it outside of the Fear and Greed stable.
It's like the child leaving home, isn't it, really? Safe Word's been something that it used to be the Sunday edition, and it evolved into Safe Word, and something that we really enjoyed with our colleague Adam Lang, the three of us chatting fairly informally, I'd say. Not a lot of business involved, but just, things that we're thinking about. It's great fun, and it comes out every Sunday, obviously.
Yeah, and it's just nice to see Apple Podcasts clearly think it's not too bad as well, and popping it up there on their homepage.
Thank you, Apples.
Yeah. Thank you, Apple, indeed. Now, immediately after this show today, you've got a great chat coming up with one of our favourite guests, Matthew Kidman from Centennial Asset Management.
That's right. We talk about what you should be investing in when interest rates are rising. Very, very topical from this week.
Yeah, absolutely. And the thing I love most about Matthew Kidman is that he actually talks about specific companies. He's not just talking vague kind of themes and trends and things. He'll actually get into the nuts and bolts of it.
Yep, and he sure does this time around. He tells us some of the companies that he likes particularly.
Yeah, all right. Now, we've got to get on with it. The main story this morning, Sean, it's really all about home loans, and Australians are dumping fixed-rate home loans as banks push up interest rates ahead of critical inflation figures this week, which could trigger a jump in the official cash rate.
Well said, Michael. That's pretty much this week in a sentence already. I'm not sure what else I have to say.
There we go.
There you go. Look, inflation figures due out tomorrow are set to show consumer prices rising by 4.5%. That would be a 14-year high, putting pressure on the federal government and the Reserve Bank to do something about the cost of living. Already homeowners are shifting towards variable rates away from fixed rates. There was a point last year when almost half the home loans being written were for fixed rate loans. That's now back to about 25% and trending much lower. The reason? Banks have lifted fixed rate loans while variable rates are mostly unchanged. Late last week, National Australia Bank lifted fixed rate loans for the fourth time this year. It's not on its own. The other banks have made similar increases. Some fixed rates, a 4-year loan, for example, are now more than double what they were less than a year ago. Now, variable home loan rates will start rising when the Reserve Bank lifts the official cash rate. With both inflation and underlying inflation, which takes out volatile items like fuel, expected to come in above the Reserve Bank's target range tomorrow, the central bank could hike the cash rate as soon as its next board meeting in a week's time. But most economists believe it will wait until it sees wages data on May 18 before moving. That means it wouldn't increase rates during the election period.
Sean, the cost of living issue certainly seems to be getting a good airing in the election campaign.
Yes, the opposition has been making plenty of it, with opposition leader Anthony Albanese blaming the government for increases in the cost of petrol, childcare and groceries, and at the same time contrasting that with little movement in wages. That's all true. Whether or not it's the government's fault is another issue, but certainly that's what's happening in the real economy. It's a weak spot in the government's claim to be a better economic manager. With the inflation figures tomorrow, the election campaign ramping up, and plenty of movement in overseas markets, which I'll tell you about shortly, the next few weeks are going to be very, very interesting for investors.
All right, you teased it just then, Sean. What is happening in financial markets?
Well, look, obviously the local market was closed yesterday and it was so close to a record last week before Friday's big sell-off. And then Wall Street fell sharply over the weekend, which doesn't augur well for our market today. The big driver at the moment is the US Federal Reserve's hawkishness on rates. We hear that term hawkishness a lot. It's a term that economists love, and it means bias towards lifting rates faster than expected. With inflation in the US running at a 40-year high, the central bank in the world's biggest economy might just make some big moves in interest rates. And that brings with it the risk of putting brakes on the US economy and potentially a recession at some point in the future. Now, it's not just equities feeling the pinch. The hawkishness is weighing on the Aussie dollar, which finished the long weekend trading under 72 US cents.
All right, what's happening away from the US?
Well, China's economic outlook is increasingly uncertain as COVID cases surge in different areas of the country, and Beijing continues its COVID-0 policy and closes down regions. Beijing itself is one of the latest hotspots. That's bad news for Australia's commodity exporters. It's also bad news for regional bourses, with share markets in Hong Kong and Shanghai yesterday falling by 2.5%. One welcome outcome of what's happening in the US and China is the price of oil has fallen and Brent crude is back below $100 a barrel. That's because slower economies will eat into demand for energy. Of course, we like that at the Petrol Bowser.
Yeah, we certainly do. Okay, we'll be back in a moment with the rest of the day's business news. Sean, Anzac Day is a difficult day when it falls during an election campaign, and the same thing happened back in 2019 because war and remembering our fallen soldiers should be apolitical, and really you do see both sides effectively taking a break from formal campaigning for Anzac Day.
If I continue the analogy, they perhaps a truce, shall we say, which is kind of true. And that was more or less the case yesterday. They can't totally stay away from it. Prime Minister Scott Morrison was in Darwin yesterday for the dawn service. He was joined by Deputy Opposition Leader Richard Marles, who's standing in for COVID-afflicted leader Anthony Albanese. Given what's happening in Ukraine at the moment and last week's security pact between the Solomon Islands and China, the services gave the Pollies the opportunity to campaign just a little, Michael. Now, remember, the Prime Minister, Scott Morrison, on Sunday said he shared the same red line as US on the Solomon Islands issue. And then yesterday, he talked about the arc of autocracy from Beijing to Moscow. Defence Minister Peter Dutton was typically more blunt, saying the only way to preserve peace is to prepare for war, something opposition defence spokesperson Brendan O'Connor agreed with.
Sean, how about this one? The Nationals candidate for the regional Queensland electorate of Flynn, Colin Boyce, caused a bit of a stir when he said the Morrison government's net zero by 2050 pledge was not binding.
Mr. Boyce said the commitment left wiggle room and Morrison's statement on net zero was flexible. I'm sure, Michael, he'll be getting a call from Election HQ.
Oh, I'm sure he will. And Nationals leader Barnaby Joyce was involved in an incident.
Yes, a 52-year-old man has been charged with threatening a federal police officer after a roadside confrontation involving the Deputy Prime Minister on Sunday.
Sean, Canberra's Anzac Day commemorations at the Australian War Memorial attracted more than 20,000 people yesterday.
After 2 years of smaller crowds due to COVID, it was great to see so many people there yesterday, and it was repeated across the country. Governor-General David Hurley called it powerful and poignant. Notwithstanding the campaigning going on by the Pollies, it was a return to a more normal Anzac Day with marches, memorial services, and of course, Michael, plenty of tour.
Yes, indeed. Now, shifting to corporate news, Sean, there are reports that Mirvac Group is in advanced talks to take control of AMP Capital's flagship office fund, while Dexus, another property provider, could take AMP's asset management arm.
According to the Financial Review, Mirvac has lobbed a revised proposal to take management rights over the $7 billion AMP Capital Wholesale Office Fund. If successful, and it has the support of some of the fund's largest investors, then AMP Capital's $25 billion real estate platform will be broken up between Dexus and Mirvac. Now, the Fin is reporting that Dexus is already working to secure the bulk of AMP Capital's Australian arm. Officially, though, AMP Capital is still planning to delist from AMP and become Collimate Capital later this year.
Sean, I'm curious. You talk about something like the AMP Capital Wholesale Office Fund, and it's quite a name. But what are the assets that you're actually talking about?
Yes, it's actually a really good question because we become quite blasé about this. We just talk about these types of funds. But of course, they actually house real assets. So the Wholesale Office Fund manages about $7 billion worth of property. It includes the new Quay Quarter in Sydney down at Circular Quay, a beautiful building, and Collins Place, an iconic building in Melbourne, plus, of course, a bunch of other buildings.
All right. Now, Sean, Australia's two big energy companies, Woodside Petroleum and Santos, haven't done so well in the latest rankings of preparedness of oil and gas companies for a low-carbon world.
No, they haven't. And that's bad news for investors, notwithstanding the huge amounts of cash that companies are chucking out at the moment on the back of higher energy prices. The Bloomberg New Energy Finance's ranking of 41 global oil and gas producers around the world have Woodside at 29 and Santos at 36. Mind you, they're both a bit better than last year. The thing about the energy companies is that they will have to transition to a carbon neutral world eventually. It's inevitable. The ones that rank highest and that shareholders tend to prefer are the ones that have a plan to transition and have started on the road, even if they still dig up plenty of fossil fuels. They're the guys that actually know where they're going, know how their business will look in 10, 20, 30 years' time. And they're the ones that shareholders really like. Now, in the Bloomberg rankings, the top three are Shell, France's Total Energies, and Spain's Repsol, all of which are known for their transition plans. Really, Woodside and Santos just don't look real good when compared to global majors.
No, certainly not. Now, regulatory pressure, Sean, is increasing on crypto assets such as Bitcoin and Ether, with the government's financial intelligence agency AUSTRAC joining the banking regulator APRA to push for more controls over the digital currencies.
That's right. AUSTRAC has issued a financial crime guide providing to banks, including the Big Four and digital currency exchanges, what it expects will enhance due diligence on crypto assets. Basically, AUSTRAC says that because crypto deals are generally anonymous and borderless, they are ripe to facilitate serious crime. Some of the activity AUSTRAC is worried about is money laundering, purchasing of illicit products on the dark net, terrorism financing, scams, tax evasion, and ransomware attacks.
So what exactly does AUSTRAC want then, Sean?
It's basically asking for greater monitoring of local involvement in the $2 trillion crypto market. Now, this comes after the banking and insurance regulator, the Australian Prudential Regulation Authority, last week set out proposed guidelines around monitoring cryptos. The sector is getting so very, very big, and increasingly it's part of the day-to-day financial system. Regulators are really scrambling to keep on top of the rules and regulations they need to impose to make sure it's clean.
Okay, still plenty of COVID cases around, Sean.
Yeah, there are. Western Australia recorded 5,600 yesterday. South Australia was 3,200 and Queensland was 4,600 cases. Tasmania was under 1,000 infections. Fortunately, New South Wales and Victoria both had around 8,000 cases.
And just a quick one for you, Sean. CIMIC Group, which was once Leighton Holdings, is set to delist from the ASX after hostile bidder Hochtief secured more than 95% of CIMIC's shares.
Yes, and when you have 90% of a company, you're allowed to acquire the rest. The offer has been extended to 7 p.m. tonight, and then the buying of the remaining shares will occur. Then delisting ends quite a run for the huge engineering services company, which, as you mentioned, was known as Leighton Holdings.
All right, moving on to overseas news now, Sean. And French President Emmanuel Macron has been re-elected for a second term, defeating the far-right candidate Marine Le Pen in a runoff election.
Yes, I think many global leaders sighed with relief knowing that centrist Macron had won. Our own Prime Minister Scott Morrison congratulated Macron, saying it was a great expression of liberal democracy in action in uncertain times. Remember, Macron is no fan of Morrison following the French subs debacle last year. Macron is the first two-term president of France in more than 20 years.
US Secretary of State Antony Blinken and US Defense Secretary Lloyd Austin have met with Ukrainian President Volodymyr Zelensky in the highest level visit to the country's capital by an American delegation since Russia first attacked the country.
It came as Ukraine pressed the West for more powerful weapons against Russia's campaign in eastern Ukraine's Donbass region, where Moscow forces sought to dislodge the last Ukrainian troops in the battered port of Mariupol. That war continues, and there are fears that Russia is about to escalate its attacks.
All right, now, Sean, I know you've been waiting for this one since we mentioned it at the beginning of the show, but Ferrari has been having a pretty good time of it recently, not least because of their success in F1, but the company has had to recall thousands of supercars.
Yes, and that triggered a big drop in Ferrari's share price. Apparently, there are problems with the braking system, which I dare say is rather important when you drive a Ferrari. It's recalling its 458 and 488 models. Fortunately, I don't happen to have one of those ones, so it doesn't affect me personally, and probably not you.
No, it's not really a problem that I suspect most of us can identify with, but if you just kind of translate the same thing to, say, a Ford or a VW, then we can kind of empathise, can't we?
Yeah, sort of. I mean, there are 2,200 cars in China alone being recalled. Ferrari won't actually say how many in total, but it's obviously thousands and thousands of cars around the world. I just think it's hilarious. Of all the things that Ferrari didn't get right, brakes.
Yeah, kind of important. All right, now up next is the Fear and Greed Daily interview. And as we mentioned earlier, you were speaking with Matthew Kidman from Centennial Asset Management.
Yep, and as we mentioned, he gives us some of his favourite picks in a world where interest rates are rising.
All right, that's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 26th of April, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. And don't forget, you can listen to Fear and Greed as well through your smart speaker. Just say, play the Fear and Greed podcast, and away you go. I'm Michael Thompson, and that was Fear and Greed. Have a great day.